Hi everyone, welcome to our fifth topic of financial accounting, that is the cash book and bank reconciliation statement. We shall begin with the cash book. So what is a cash book? What is a cash book? A cash book is a book in which business cash and bank transactions are recorded. The book in which cash and bank transactions are recorded. A cash book is a part of a ledger, and as well it's a book of original entry. And being part of the ledger, okay, maybe we can revert back to our second topic, the ledger and the concept of double entry. You remember us posting transactions into the account. So being that the cash book is a part of the ledger, is that the cash book also applies the concept of the ledger. So we have a T account for the ledger, and we employ the concept of double entry for the cash book. So that is to say, when we pay cash, we credit either the cash account or the bank account in the cash book. And when we receive cash, we debit the cash book. To be specific, we either debit the cash account or the bank account in the cash book. So in conclusion, we say that the cash book is a part of the ledger. So it's like any other T account which follows the concept of double entry. So whenever cash or bank is decreasing, we're supposed to credit in the cash book. And whenever cash or bank is increasing, we're supposed to debit the cash book. So this topic is more the same as reverting to our second topic. So it's an application of our second topic. Again, we say that a cash book is a book of original entry. Yeah. So I'll give you an assignment by the way to work on to read on books of original entries. A book of original entries is a book where the transactions are initially recorded. So whenever a transaction takes place, it is first recorded in the books of original entry. And a good example of a book of original entry is the journal. Then from the books of original entry, we post into the ledger where the cash book is a part of. So as part of double entry, we can see that any entry made in the cash book is part of double entry, which means that we have debits and credits. Cash and bank are records an asset, that is money. So when cash is increasing, you're supposed to debit cash account, yeah. And when cash is decreasing, you're supposed to credit the cash account. The same case with the bank. If our bank account is increasing, we're supposed to debit a bank account, and if the bank account is decreasing, we're supposed to credit the bank account. Please note that I may be mixing myself as I'm explaining, but I hope you understand that whenever an asset is increasing, you're supposed to debit, and whenever the asset is decreasing, you're supposed to credit. So the same applies with cash and bank, which are both assets. Whenever they increase, you're supposed to debit, and whenever they decrease, you're supposed to credit. So a cash book is a part of double entry. Yeah, so it follows entries in the cash book will follow the double entry concept of accounting. And also the other thing that we need to note is the cash book is part of the ledger. So you shall note in our examples that the cash book is just like any other ledger account, like the purchases account, like the sales account, like any other assets account, where the rules of double entry will have to apply. So in a cash book, we can maintain two accounts or three accounts. So we have two types of cash books. Mainly, we have the three-column cash book and the two-column cash book. So in the two-column cash book, we maintain two accounts. That is the cash account and the bank account. Yeah. In the two-column cash book, we maintain two accounts. That is the cash account and the bank account. And then we have the second type of cash book, that is a three-column cash book, which has three columns. Yeah. The three columns where two of them maintain the cash account and the bank account, and then the other that column maintains the discount columns. That is for the discount allowed and for the discount received. We shall have examples to illustrate all this. So we have two types of cash books, mainly. That is a two-column cash book and a three-column cash book. So we begin with the two-column cash book. So the two-column cash book has two amount columns. So one to maintain the cash account, and the other for the bank account. Yeah. So this should be the bank account. So to record, for cash account to record cash transactions made by cash, and for bank account to record cash transactions made through the bank. So we have an example here to illustrate two-column cash book. So we have S. Oweru starts business on 1st April 2010 with cash 500,000 shillings. The following transactions took place. So you have the transactions listed there. Then the requirement is to prepare to prepare a two-column cash book. So and we have our cash book there. So as you can see, it is just like any other ledger account, which has two sides, that is the debit side and the credit side, and has a title, that is a cash book. So it has a date column, the particulars column. We have that column for the cash account, and you have the column for the bank account. And then we have the credit side, where you also have the date, the particulars, the cash column for the cash account, and the bank column for the cash account. So this is a solution to the question we have above here. So you realize that the entries are basically just like the ones we covered in our second lesson. We debit and credit accordingly, just like any other ledger account. So this question only requires us to do a two-column cash book. So that's what we prepare. So we need to keep in our mind that there are other accounts to be affected by the transactions. But this is merely an application of the second lesson of this unit. So let us look at the transactions and see how they are posted in the cash book. So the first transaction we have is the one I've highlighted there, where S. Oero starts business on 1st April 2010 with cash 500 shillings. So to post this transaction, you remember there are three questions to answer. One, which two accounts have been affected? Two, what type of accounts are they? And three, which account is to be debited and which account is to be credited? I hope you remember all that. So in this case, for this transaction, there are two accounts where one is capital account and the other one is cash account. Yeah, cash account and capital account. What type of accounts are they? Cash is an asset, capital is merely capital. So both are increasing. When cash is increasing, being an asset, is supposed to debit cash account. And then capital, whenever capital is increasing, is supposed to credit capital account. So in this case, we debit cash, we credit capital account. So therefore, we go to our cash book and debit cash, the cash book in the cash column. I hope you can see that. And then we're supposed to open a capital account and credit. But this question only requires us to do the two-column cash book. So the only entry that you make in the case of this question is that you debit the cash book in the capital column by capital account. And then move on to the second transaction highlighted there, that he opened a bank account and paid in it 450,000 shillings. So which two accounts here? In this case, we have the cash account and the bank account. So he's taken the cash that he has in the business and deposited it in the bank. Yeah. So the two accounts therefore will be cash and bank. So the cash account will decrease by 450,000 shillings, and then the bank account of the business will increase by 450,000 shillings. So therefore, cash account will be credited, bank account will be debited. So we move on to our cash book. Remember, it has two columns for cash and bank. So both the cash and bank account are maintained here. So you've said we credit cash account as I rated there. So in the cash book, so you notice in the cash column, we've credited the cash account. And then we debit the bank account. You've seen that. So the same transaction is posted in the same cash book. We credit the cash account by 450,000 shillings, and then in the same cash book, we debit the bank account. So you'll notice that the two accounts are in the credit is in the cash column, on the debit it is in the bank column. So this entry is what we refer to as contra entry. And as you can notice, it's highlighted with the letter C to indicate a contra entry. Yeah. So a contra entry is an entry that is recorded in the same book, in the same ledger. So in this case, you're having the cash book. we have that transaction being recorded in the same cash book. So that is a contra entry, where you have the debit and the credit entry of the same transaction being recorded in the same ledger. So, and we have a perfect example here, this transaction whereby we credit cash account and we debit bank account within the same ledger. Then we move on to the second transaction, bought goods for cash, 10,000 shillings. So in this case, which two accounts have been affected? So in this case, we have purchases and cash account. What type of accounts are they? Purchases is an expense, cash is an asset. So in this case, expenses are increasing and cash is decreasing. Purchases is going up, cash is going down. So purchases being an expense, whenever an expense is increasing, you're supposed to debit. And for cash being an asset, whenever an asset is going down, you're supposed to credit. So therefore, debit purchases and then credit cash. So in our question, you're only required to have entries in the cash book, in the cash book. So we keep in our mind that we're also supposed to record in the purchases account. So in our cash book, we're supposed to credit cash 10,000 shillings. So we have it there. April 2nd, 2010, purchases in the cash column, 10,000 shillings. And then we move on to the that transaction that bought motor vehicle and paid by check 200,000 shillings. So which two accounts there? The two accounts are motor vehicle and the other account is bank account. Both are assets. So for the motor vehicle account is going up, the bank account is going down. So motor vehicle being an asset which is going up, we're supposed to debit motor vehicle account. And then bank account is going down, so therefore credit bank account. So our equation only requires us to have the cash book. So in our cash book, we are supposed to credit bank account. So therefore we have it here as highlighted, credit bank account by motor vehicle on 3rd of April, and you notice that the amount has been posted on the bank column. Then we move on to our fifth transaction. Bought goods for 50,000 shillings and paid by check. So the two accounts here is purchases and bank. So purchases is an expense, bank is an asset. Purchases is going up, bank is going down. So therefore, for purchases being an expense that is going up, you're supposed to do what? Debit. Whenever an expense is increasing, you're supposed to debit. And then for bank is an asset. In our case, in this transaction, it's going down, so therefore we credit bank account. So in our two-column cash book, we credit bank account by purchases, as shown there. So in the bank column, we credit 50,000 shillings. Where is this thing pausing? Then we move on to our sixth transaction. Sold goods for cash, 20,000 shillings. So in this case, the two accounts are sales and cash account. So both are increasing. So sales is increasing, cash should also be increased because cash is coming in. Yeah. So sales is a revenue, cash is an asset. Whenever revenues are increasing, you're supposed to credit. Whenever revenue is increasing, you're supposed to credit. So therefore, say credit sales account. And then whenever an asset is increasing, you're supposed to debit. So therefore, debit cash account with the increase. So therefore, April 7th, we debit cash account is 20,000 shillings in the cash account. So we have it here. So April 7th, debit cash account by sales, 20,000 shillings. Then we move on to our next transaction. On April 10, paid expenses, 5,000 shillings in cash. So which two accounts there? We have one expenses and the other one is cash. We have expenses and cash. So expenses is an expense, cash is an asset. So expenses are going up, cash is going down. So debit the expenses account because expenses will be debited whenever they increase, and then credit cash account because it's decreasing. Whenever an asset is decreasing, it's supposed to do what? Credit. So therefore, credit cash account. So in our two-column cash book, we credit cash account on April 10th by expenses as highlighted there. Then next transaction, sold goods and received cash. Sold goods and received check for 30,500 shillings. So in this case, the two accounts is sales and bank account. So sales is a revenue, bank is an asset. Both are increasing. So whenever a revenue is increasing, you're supposed to credit, and whenever an expense is an asset is increasing, you're supposed to debit. I don't know, have I said it right? Okay, whenever revenue is increasing, is going up, you're supposed to credit the revenue. And whenever an asset is going up, you're supposed to debit the asset. So therefore, in this case, we debit the bank account and then we credit the sales account. So in our cash book, it's on 15th. We credit bank account. Sorry, a bank bank is increasing, so therefore it's supposed to debit bank account. So on in our equation, we debit in the cash book in the bank column as highlighted there. Is it 3,500? Yeah, 3,500. And then we move on to us the next transaction, paid cash into bank. Paid cash into bank. So paid cash into bank. So which two accounts have been affected here? The two accounts are cash and bank. So this will be another contra entry. So both the accounts here is cash account and bank account, both of which are in the cash book in the same ledger. So in this case, we shall credit and debit within the same ledger. So paid cash into bank, this means that he took money from his safe, from his cash box in the office and took it to the bank. So therefore, the cash account will decrease and the bank account will increase. The cash will go down, the bank will go up. So both being assets, whenever an asset is increasing, you're supposed to debit, and whenever an asset is decreasing, you're supposed to credit. So therefore, credit cash, debit bank. So as you have it here, credit cash on April what, 16th, credit cash, 20,000 shillings, and at the same time, in the same book, debit bank. So debit bank by cash in the bank column, 20,000 shillings, and credit cash. So in the cash column, 20,000 shillings, and the description is by bank. And you realize that both have been highlighted with the letter C to indicate a contra entry, an entry which is entered twice in the same account, in the same ledger. So you have the debit and the credit in the same ledger. So with that, I hope you've understood the concept of posting into the cash book. It's simple, it's easy, it's just like any other account in the ledger. You debit and credit where appropriate. So I will leave it for you maybe to go to the notes have been attached in this video. So please go through the notes and repeat the procedure again, and I'll be able to understand better. So I hope, so let us move on to the next item, the 3-column cash book. So you've looked at the 2-column cash book, which has 2 columns. Now you're looking at the 3-column cash book, which has 3 columns. So for the 3-column cash book, it has 1 column for the bank, 1 column for cash, and the 3rd column to record discounts. To record discounts as and when they arise. So the difference between a 2-column cash book and a 3-column cash book is that a 3-column cash book has an extra column to on top of the cash column and the bank column. The 3rd column will be used to record discounts as they arise. So we first begin by understanding the various types of discounts that may arise. So we have trade discount and cash discount. So what is a trade discount? So a trade discount is a discount that is given in view of quantity purchased. So in this case, in most cases, the trade discount is given to induce customers to buy in large quantities, because the more you purchase, the less you pay. So you're given a discount based on the amount you've purchased. Yeah. So you purchase more, you're given a higher discount. So this is to induce you as a customer to buy from the business. So if large quantities are purchased, then the invoice price is reduced, and this reduction is known as the trade discount. So the trade discount is shown as a reduction from the invoice price, and it is the net amount that is recorded, entered in the ledger. So as such, a trade discount is not recorded anywhere in the books of account of the business. So trade discount does not require any accounting treatment. So say for instance, you've bought goods worth 20 shillings, and then you've been given a discount of 5 shillings. It means you've only paid 15 shillings. So as the accountant of the business, what you do is that you debit your purchases with only 15 shillings and credit your cash with only 15 shillings. So there's no requirement for you to record that 5 shillings trade discount in the cash, in the ledger. So trade discount doesn't require any accounting treatment. And the reason for this is because it is given at the time, at the point of purchase. Trade discount is usually given at the point of purchase, unlike the cash discount, which is usually given at the point of making a payment. Cash discount is usually given at the point of making a payment. So in this case, a cash discount arises from a credit transaction. So you buy goods at 20 shillings on credit basis. After 1 month, you come to pay for the goods, and the creditor is impressed by your timeliness in paying for this commodity, so he gives you a discount of 5 shillings. So you end up paying 15 shillings. So what will happen is that initially when you bought these goods on credit, you you debited your purchases and credited the creditor's account by 20 shillings on both accounts. So in your mind, you know that the amount due from you to the supplier is 20 shillings. But at the point of purchasing, you only pay 15 shillings. So in your cash book, you only credit 15 shillings at the point of purchase. So there will be a deficit of 5 shillings. So this 5 shillings has to be accounted for when paying for this discount. So these 5 shillings will be accounted for as a discount received. So therefore, for a cash discount, which arises after a credit transaction and after when paying for a credit transaction, has to be recorded in the books of accounts. So I hope you've noted the differences between the trade discount and the cash discount. The trade discount arises at the point of the purchase or the sale, at the time of the original purchase or sale. That is a trade discount. The cash discount arises at the time of paying or receiving from a credit transaction. So I hope you get me. So please note this. So trade discount doesn't require any accounting treatment. It arises at the time of transaction or purchase or sale, whereas cash discount arises at a future time after the sale or purchase transaction. And as such, a cash discount has to be recorded in the books of accounts to explain the difference. Why are you paying less? Why are you receiving less? You have to record this cash discount. So a trade discount is that which is given in view of quantity purchased. A cash discount is given in view of the timeliness in paying for a credit transaction. So a cash discount is given after an amount of time has elapsed from the date of the sale or purchase transaction. So therefore, as I can read here, a cash discount is given to induce customers to pay for their accounts promptly on their credit purchases. So usually the earlier the customer or the debtor pays the accounts, the larger discounts are granted to them. So a cash discount is usually given to induce customers to pay earlier, to pay in good time, whereas a trade discount is given to induce customers to buy in large quantities. So the treatment of cash discount can never arise until a payment is made. So when the debtor is paid, the amount of cash discount is calculated and deducted from the amount payable, and the difference only is payable to the debtor. So and what remains is a discount, and it has to be accounted for. So there are two types of cash discounts. So I hope you've gotten the difference between the trade discount and the cash discount. So we look now at the two types of cash discounts. So we have under the cash discounts, we have the discount allowed and the discount received. So we have the discount allowed. So discount allowed is given to customers of the business, to the debtors, those who had bought from the business on credit basis. So when your customers pay in good time, you give them a discount as an appreciation for them paying you in good time. Yeah, so that is called, that discount you give them is a discount allowed. A discount allowed is a loss to the business, or we can also say it's an expense to the business. So it is treated as an expense. So whenever we give as a business, whenever we give a discount allowed, we are supposed to debit the discount allowed account, being that the discount allowed is an expense. Whenever expenses are increasing, you're supposed to debit the expense account. So therefore, discount allowed is always debited when it occurs. Then you have the discount received. A discount received is that which we receive as a business from our credit suppliers. So when we are making payments for purchases that we had made on credit basis, the supplier may be impressed by us and give us a discount. So he allows us to pay less. So that discount that we receive is a discount received, basically. Yeah. So the discount given by our suppliers is a discount that we have received. Yeah. So this is the discount received from the creditors or the supplier or the credit suppliers. That is, it is treated as a gain to the business, and a gain is the same as a revenue. So it is therefore treated as a revenue. Yeah. It is a gain to us. So therefore, revenues should always be debited whenever they are realized. Yeah. So therefore, dividends received will always be credited whenever they occur. So discount received will be credited and discount allowed will be debited. So now back to our 3-column cash book. So we see that the 3-column cash book has a third column to record discount as it occurs. To record discount as it occurs. So in our 3-column cash book, we have on the debit side, we record in the third column, we record the discount allowed. And on the credit side, in our 3-column cash book, we record the discount received. So please note that. So on the debit side, in the discount column, we record the discount allowed, and on the credit side of the cash book, in the third column, the discount column, we record the discount received. And please note that these are two different accounts. Discount allowed account is different from discount received account. I repeat, discount allowed account is different from the discount received account. Discount allowed is an expense, discount received is a revenue. So before we look at an example, let's analyze this paragraph. That cash discount occurs frequently, and instead of making so many entries in the discount allowed and discount received accounts, it is more convenient to make just one entry for one period for these accounts. For this purpose, a third column is added to each side of the cash book to record the discount amount. So discount allowed is recorded in the discount column on the debit side of the cash book, whereas the discount received is recorded on the credit side of the cash book. I think I had said that. So these two discount columns are regarded as memorandum accounts only. So it means that these discounts only make a note of discount as it occurs and are not part of double entry. So at the end of the period, the totals of these discount columns are transferred to the respective discount allowed and discount received accounts, and the individual discount amounts are recorded in the respective accounts of debtors and creditors. So these discount columns are regarded as memorandum columns only. So you do not balance them off in the cash book. So they are merely for recording the discounts as they occur. And then in the end, we transfer the total of these discount columns to the respective discount accounts. That is the cash. That is the discount allowed and the discount received. So we shall see that in the following example. So we have here an example. Write up a 3-column of cash book for Mr. Karaoke from the details given below. Then balance off the cash book at the end of the month and show the discount accounts in the general ledger. So we have these transactions. So let us post them in the cash book, in the 3-column cash book. So the procedure is similar to the one that we had looked at, the first example that we had seen. So we debit and credit where appropriate. And as you can see there, it's like any other T account with two sides. That is a debit side and the credit side. So we begin with the first transaction. Started business with 25,000 shillings. Which two accounts? Bank, sorry, in this case, yeah, let's say it's bank because the subsequent transaction is being made by bank. Let's assume that the money goes into the bank so that we're able to make the payment on October 2nd. So therefore, in this case, the two accounts is bank and capital. Whenever capital is increasing, we're supposed to debit, and whenever an asset is increasing, whenever capital is increasing, we're supposed to do what? Credit. And whenever an asset is increasing, we're supposed to debit. So in this case, capital is increasing, so therefore credit capital account and then debit bank account. So in our cash book, so the question only requires us to do the cash book. So we debit bank account by capital 25,000 shillings. Then we move on to our second transaction. Bought goods by paying check 3,800 shillings. So in this case, the two accounts here are purchases and bank. So purchases is going up, bank is going down. So therefore, debit purchases, credit bank. I hope you are together. So debit purchases, and then credit bank. So in our cash book on the bank column, we credit as highlighted there. Then we move on to the third transaction. Bought goods from H. Marshall, 5,000 shillings. Bought goods from H. Marshall, 5,000 shillings. Which two accounts here? Two accounts are purchases and H. Marshall. So whenever we have a transaction like this one that does not specify whether we paid for these goods or not, we assume that this is a credit transaction. So if the question had said that bought goods from H. Marshall 5,000 shillings by cash, then we would have debited cash. But in this case, it doesn't specify whether this payment was made by cash or bank. So we assume it to be a credit transaction. What? I think I'm encountering challenges with my recording. But anyway, so in this case, this is a credit transaction. So this is a credit transaction. So we assume that the business bought from H Marshall on credit. So because cash or bank has not been specified. So therefore, in this case, the two accounts are one, purchases and H Marshall. So the two accounts is purchases and H Marshall. So there is no cash or bank. So as such, this question will not enter anywhere in the cash book. So when I look at our cash book, there's no entry for that transaction. So this transaction will only be entered in purchases account and H Marshall's account. So it will not go to the cash book. Please note that. So the two accounts is purchases and H Marshall. So no cash book entry for this transaction. So then we move on to our fourth transaction. Our fourth transaction is sold goods to AB and Company, 2,600 shillings. Sold goods to AB and Company, 2,600 shillings. So which two accounts here? The two accounts are sales and AB and Company. So sales and AB and Company. So there is no cash or bank here. So as such, this entry shall not go anywhere in the cash book. So when I look at our cash book, that transaction is not entered. So please refer to these notes I have sent you. Yeah. So sales and AB are out of the cash book. So as such, this transaction will not be entered anywhere in the cash book. Then October 5th, cash a check for office use, 2,000 shillings. So this is another contra entry. So the two accounts here is cash and bank. So in this case, it means that he withdrew money from the bank and brought it to the business, yeah, and put it in the cash box. So bank account is going down, cash account is going up. So therefore, credit bank account, debit cash account. So both are entering in the cash book. So we credit bank, debit cash by 2,000 shillings on October 5th. So on October 5th, credit bank account as highlighted there, so it's by cash in the bank column. So highlighted by C to indicate a contra entry because we still have the same transaction entered on the debit side of this. So by debiting in the cash account, as you can see there, and the description being by bank. I'm having some challenges here with my recording, so hope you are bearing with me. And then the other transaction is on October 6th, bought goods from XY and Company, 7,400 shillings. So in this case, the question also doesn't tell us whether the payment was made by cash or bank. So we assume that this is on credit basis. So if it doesn't, the transaction doesn't say whether the purchases was made by cash or bank, then we assume it's a credit transaction. So as such, in this transaction, we have the two accounts we have is purchases and XY and Company. Purchases and XY and Company. So there is no cash or bank. As such, no entry will be made in the cash book. So even in a look at the cash book, there is no, that transaction has not been posted. Oh, so the transaction on 6th is not here. Cannot see any. Is it here? No. There is no transaction on 6th. So because we only have, in this case, it's purchases and X and Y and Company. So no cash or bank, as such, no entry in our cash book. And then October 7th, sold goods to M Karaoke, 3,700. So in this case, the two accounts are sales and M Karaoke. So these accounts, okay, these transactions, just like the other ones that we've seen on purchases and sales, does not specify whether cash or bank was paid or was received. So this is another credit transaction. And in this transaction, the only two accounts here is sales account and M Karaoke. So they will not also be entered anywhere in our cash book. So these they only be recorded in they are recorded in the sales account and in M Karaoke's account. So they will not appear anywhere in the cash book that we are posting here. And then we have paid expenses in cash. Paid expenses in cash. So the two accounts here is expenses and cash. So expenses are going up, cash is going down. Whenever an expense is increasing, you're supposed to debit, and cash is an asset. Whenever an asset is decreasing, you're supposed to credit. So cash being that it is going down is supposed to credit. So as such, we debit expenses and credit cash. So as you can see in our cash book on October 8th, so October 8th, credit cash by expenses, 300 shillings. Then we have October 10th, sold goods for cash, 2,500 shillings. So the two accounts here is sales and cash. So sales is a revenue, cash is an asset. Sales are increasing, cash is increasing. Whenever revenue is increasing, you're supposed to do what? Credit. And whenever an asset is increasing, you're supposed to do what? Debit. So therefore, credit sales, debit cash. So in our cash book on October 10th, we debit cash by 2,500 by sales, as highlighted there in the cash column. Then we proceed. To the transaction is October 8th. Paid to H. Marshall, the amount due to him less 5%. Paid to H. Marshall, the amount due to him less 5%. So how much do you owe H. Marshall? So you had bought from H. Marshall on October 3rd, 5,000 shillings. But now we are paying him on 11th, and we are supposed to pay him less 5% cash discount. So this is a discount received. So in this case, we have three accounts. We have H. Marshall, and then we assume we are paying him with cash. So the other account will be cash account. And then we have discount of 5%. So the discount of 5% is 5% of 5,000 shillings, which is supposed to be 250 shillings. So in this case, I repeat, we have H. Marshall account, we have cash account, and we have discount received account. So when we pay H. Marshall, we debit H. Marshall account, because remember, okay, H. Marshall in this case is our creditor. A creditor is a liability. So when we pay H. Marshall, it means that the liability that we have with him is decreasing. So therefore, debit H. Marshall, and then credit cash account with the amount that you are paying, that is less 5% of 500, which will be around 470. And then we're supposed to credit discount received. Discount received is a revenue, and whenever a revenue is increasing, you're supposed to credit. So therefore, we record this in our cash book as follows. In our cash book, the date is October 11th. So October 11th, we credit on the credit side of our cash book. We credit bank account by 4,750, and then we post the 250 shillings discount in the discount column as shown there. I hope you are together. Then we move on to the other transaction. October 12th, received from AB and Company a check of the amount due less 5% cash discount. Received from AB and Company a check of the amount due less 5% cash discount. So the two accounts here, we have AB and Company, and then we have bank account, and then we have 5% cash discount. So we are receiving a check from AB and Company less discount. So this will be the discount allowed. So we have given a discount to AB and company. I hope you are together. So we are receiving a check that is less 5% of the amount due. So this less 5% is the discount allowed, which is an expense to the business. Hope you are together, guys. So therefore, the three accounts is AB and company, bank account, and discount allowed. So how much do we owe as at 12th October? How much do we owe AB and company? So we had bought from AB and company on 4th of October, 2600. So on 11th, you are paying less 5% of 2600, which is around how much? That's difficult for me to calculate. But okay, we do understand that this is a discount received. And the discount that you receive is supposed to be is an income. Sorry, this is a discount allowed. We have allowed a discount to AB and company. We have allowed him to pay us less the amount due. So this is a loss to the business. It's an expense to the business. As such, we're supposed to debit whenever we incur this. So therefore, debit the discount allowed, and then debit the bank account that you are receiving, because you are receiving money, though it's less by 5%. So as such, on October 12th, in our cash book, we debit by A, B, and company. The discount is 130, and the amount you receive, we debit it in our bank account. The amount is 2470, and the amount we receive is 2470. I'm having challenges with this video of mine. Hope you'll bear with me. 2470. Hope we are together there. Then we move on to the other transaction. On October 13, paid expenses in cash. Which two accounts here? Expenses and cash. Expenses are increasing, cash is going down. So whenever expenses are increasing, we're supposed to debit, so therefore debit expenses account. Cash is decreasing, so therefore we credit cash account. So in our cash book on October 13th, we credit our cash book in the bank column as highlighted there. Then we move on to our next transaction. October 17th, pay to XY and company by check, deducting discount 3%. So in this case, the accounts are XY and company, bank account, and discount. So what type of discount is this? So we are paying to XY and company, who is our supplier, our creditor. So the liability will be decreasing. So therefore, we're supposed to debit XY and company, and then our bank account is decreasing because the amount we are is going to pay. So our bank account is decreasing, therefore credit bank account, and then we have received a discount of 3%. We are paying less. It's a gain to us. We treat it as a revenue. So therefore, this will go to the discount received account. The discount received is a revenue, and whenever a revenue is increasing, we're supposed to credit. So therefore, credit discount received account. So this therefore shall be shown on the credit side of the cash book as follows. So on October 17th, on the credit side, so we credit by XY and company with a discount of 222, and the amount that we end up paying is 71.78. Then we proceed to the other transaction. Received cash from M Karaoke, discount allowed to 2.5%. So in this case, we have three accounts here. We have cash account, which is increasing, therefore debit. We have M Karaoke, which is a debtor. A debtor is an asset. It's decreasing, therefore credit M Karaoke. And then we have a discount allowed. Yeah, we are receiving less. So this is an expense to us. It's a loss to us. So an expense, whenever an expense is increasing, we're supposed to debit. So as such, this is a discount allowed. It should be debited. In our cash book, it will be shown on the debit side. So therefore, debit cash, debit discount allowed, credit M Karaoke. So on October 20th, as shown. So October 20th, debit in the cash book, So debit the discount, it's 92 shillings, and debit cash account. And then credit the M Karaoke's account, which is now out of the scope of the cash book. Then October 30th, paid wages in cash 1,000 shillings. Wages in cash 1,000 shillings. What does this mean? Okay, the two accounts here is wages and cash account. The two accounts are cash account and wages account. Wages is an expense, cash is an asset. Wages are increasing, being an expense we debit, and cash is decreasing, being an asset we credit. So therefore, in our cash book, we credit which on October 30th, we credit cash by wages, as highlighted there. Then last transaction, banked cash, keeping a balance of cash in hand, 500 shillings. This will be a bit complicated. I hope we are doing it manually on our board. But anyway, we can easily see. So we banked cash so as to be left with a balance of cash in hand, 500. So you have a balance of cash in hand, 500. So this will be another contra entry. It means we take out money from our cash book, and then we are left with only 500 shillings, and then the extra amount we take it to the bank. So therefore we credit cash account and debit bank. Another contra entry. So the amount is after analysis. So in this case, we credit what? We credit cash account as highlighted there. So you can see in the bank column, we credit 1308, and then we debit 1308 in the bank column. So we credit cash account by 1308, take it to the bank, and then we debit bank account here in the bank column 1308. So this is another contra entry as indicated with the letter C. As indicated with the letter C. And then we are left with a balance of cash in hand of 500 shillings. So, and then I know you understand the concept of balancing off accounts. So after balancing off the bank account, we are left with 15,800 shillings. Then for the discounts columns, so for the cash account, you have the balance carried down. As you can see, the cash has a balance carried down of 500, and the bank has a balance carried down of 1,500, of 15,800. And then for the discounts, there is no, as you can see, there is no balance carried down for discounts. No balance carried down. The reason to this is that these discounts are two different accounts. So on the left side, sorry. So on the left side, we have the discount allowed. On the left credit side, we have the discount received. Totally different accounts, as opposed to cash and bank. So the cash column on the left side and the cash column on the right side is part of the cash account, the same account. For the cash book, for the bank, on the left side, on the debit side, a column, and the bank on the credit side column is part of the same account, the bank account. But for the discounts, on the debit side, we have the discount allowed. On the credit side, we have the discount received. So discounts, the discounts we are seeing here are two different accounts. As such, we don't balance them off. So what we do with the discounts, we just add the totals of the discounts. So on our debit side, the total is 222. That is 130 plus 92, 222. And then transfer this to the discount allowed on the debit side. And then for the discount received on the credit side, we add the totals. It will give us 472, and then transfer it to the respective, to the appropriate discount received account. Yeah, 472. And then, ladies and gentlemen, we have an example there, an assignment there. I will post it. It's due on 13th July, so 2020. That is in a week's time. So please, you are asked to work on this example. So this example also includes a petty cash book. So I may not be able to, to look at the petty cash book here. So these notes have been attached. Please, please look at the petty cash book. In case of any challenges with the petty cash book, let's have a discussion on WhatsApp. In case you need me to further clarify, we shall have a live class for that. So thank you very much. Then next we have our second topic in this lesson, that is a bank reconciliation statement. So let me pause for a minute. Then we have our second topic. Thank you.